This is Farm DKS with farmdcapital.com and the Trading Doggy Style newsletter. And we are going to talk about the path to new all-time highs for ES or SPY or SPX. ES will be the driver that will lead things. So I've got a zoomed out chart here. I've got weekly volume profiles on here. But I will say that much of the analysis comes from other time frames and other aspects that are not volume profile as well. And so just zoomed out, let's start here. So we came down and we tagged our last target of the week, 51.22, overnight on Monday. This was before the open. And the reclaim of 51.85 opened the potential for 53.81 to 85. Now, it doesn't mean it's going to go there. There's plenty of ways this could have gone. This here could have broke down back below 51.85, retested 51.22, which probably doesn't hold in that instance. So, I mean, you never know, but the volume profiles on very high time frames suggested that this hold, this reclaim is coming to 53.81 to 85. So if you're not familiar with volume profile, I would encourage everybody at least to read the free section on farmdcapital.com. I tried to make it a little bit funny. And if you have some interest in it, great. If you don't, whatever. But I do think it's a nice complement to, traditional technical analysis. But anyways, from here, we're at this really, really key spot here, 81 to 85. And so next week coming in, I mean, we could pop up here. We could look above, this week, which was today's high, and we could fail back down. And that could be potentially problematic. That's actually more bearish to come up here and fail. And even up to this 54.08 half spot, fail back below, is far more bearish than a gap down. Because, I mean, if we gap down, first of all, bulls aren't in any trouble at all until, below, that should be 53.26 and really 53.06. So we could come down here, we could gap down, consolidate here, and just rip right back out, and everything would be fine. Now, if we do lose this 53.06, I think we're coming all the way down here to 52.43 to 52.36, honestly, pretty quickly. And you can see, I mean, there's just no structure here in the price action. So forget the volume profile, just looking at the price action, it's just nothing but green candles. So where's your trapped sellers to provide natural support, right? So we lose a spot, we're coming down here. That's pretty much all there is to that. And then, that does bring some of this potentially into play. Now, it was pretty damn clear last week that prices below roughly 5,200 were deemed unacceptable. They were deemed unfairly low. We didn't want to go there. So again, we could see a bullish scenario, and this would be just an inside week, right? What if we come down here all the way to 52.40-ish, and, bulls that bought calls on Friday are crying, and then we just rip right back up, and we close the week inside somewhere up here, and we have an inside hammer. That's not going to look too terrible at all, right? So, sometimes trading lower first isn't really all that bad, right? You trap some more sellers. It gives fresh money longs a second chance to buy into this potential rally. It's not a bad look at all. Whereas, the look above and fail, if we come up here, we take this out, we reject, I would say back down below 56, it starts to look pretty gross, and it's going to threaten 26 and 06. So that I would be on the watch for, right? If you're long, you probably don't want to see that. Certainly not if we start finding 53, 56 as resistance, because it's probably going to threaten this. And I'm not really sure it's going to hold if we take out today's low. Today's low, actually, cash hours was, 24.75. So it was right off this 26 spot. So trading higher, right? So this 8.5, I'm going to go ahead and consider it minor, but I do feel like anywhere really in here could potentially lead to a look above and fail week, which again can be problematic. But if we're sticking around on high time frames, hanging up above 53.85, we're very likely coming up to test this key 54.32 half spot, which is these multiple, 2 weeks in a row we had these lows sitting right at this spot, and then we finally broke down, we back tested it, and sort of just went to hell, right? So if we come up here, and again, high time frames, 54.32 half, we reclaim this, we should come to 55.30. Now again, you've got some potential trap spots in there. We've got right around 54.5, right around 54.62. You could argue this range here could potentially be problematic just looking at a weekly profile. I really don't think so, looking at the big picture. So I think if we come up here, we break 54.32.5, we do some chop in here and then go. I think 55.30. I don't really think 5,500 is going to have enough for it. I mean, it'll stall here. But it's again, it's going to have to get below 54.32.5 and come right back down here, lose this. I mean, that's your risk, and that's kind of tough sledding. We, probably need, either a new catalyst or some really strong sellers for something like that to occur. So I really feel like sellers are coming in next week here. If we're trading higher first, this is going to be your problem area right in here. So be on watch for that. But I definitely would be cautious in this, let's say 54.32.5 to 54.62-ish range. And again, I think it's coming to 55.30, really, if it ultimately holds that 54.30 spot. Now, so let's say 54.30, 55.30, and then really, truly by coincidence, 56.30 is your next spot. I don't think any of this is going to offer a whole lot. Maybe up in here, 55.70s could be potentially problematic. But again, like you're going to have to start popping levels to the downside. So on high time frames, if we're sticky above 55.30, I think 56.30. And then again, kind of by coincidence, just about 57.30 is all-time highs, 57.21 quarter. Again, you could make an argument for 56.70, 71 being problematic. But I mean, we're talking about an instance where like we're making new lows or we're making new highs. And to me, above 55.30 and holding, it's making new highs. So 55.30, mark that. 54.30, you can just call it, mark that. Kind of a coincidence. It's exactly 100 handles apart. Those are your big key areas. So again, next week, watch out for a look above and fail that takes you back below 53, 56-ish. That's your potential risk. And then you're watching out in this range here, because sellers could step in here. And really, if they're going to mount a defense, I really expect it to be here. So I will be on watch there. I will probably be looking to short, at least for an initial reaction in that spot. So watch out for me on the tape. But that's basically your path. 55.30, I think, your gold. If you're interested in learning more, check out farmdcapital.com. There's a free blog section on there where I've just started to put some free things. You can also, from there, navigate to the newsletter. There is a free section with daily recaps, and I do like to hide some Easter eggs in there sometimes. If you choose to subscribe, we do daily plans, weekly plans, and also have a Discord where we may potentially identify new intraday or swing setups and sort of discuss management of trade throughout the day.